Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the futures here. We're going to take a look at volatility. We're going to look at some of the stocks that reported today, um, and we're going to look at a stock that's reporting tomorrow. Okay, so first up is futures here. You can see, we've got another red candle forming today, or tonight, after the red candle that formed today, following the five green candles in a row for the Dow Jones Industrial Average. So it is pulling back right now. S&P 500 is down in futures trading too. That's two red days in a row. It could totally be green tomorrow. Nasdaq here was down 2 days in a row, and then today, it looks, it's trying to find some support here. We've got Microsoft that's trading higher in after hours, and then you have the Russell 2000 that was pushing higher the last 3 days, and then it looks like it's taking a little bit of a breather with futures trading as well tonight. So yeah, the markets are under a little bit of pressure, and if you watch the VIX video that I showed on FinViz, I mean, it has signaled this pullback correctly. So regardless, with this not lining up with the other VIX futures charts, this was signaling that there was some downside risk headed for the markets. And that alert, 3 days ago, was the signal that there was some volatility heading back into the market and to be cautious. So once again, having the red day today and then red tonight in futures trading, this was another good signal for this FinViz VIX futures. So yeah, it does keep working, even though it threw me off a little bit a couple times there. I mean, and it wasn't lining up with these charts from StockCharts.com. It's definitely was signaling correctly that there was some turbulence ahead. And then if you look here at the Volatility Index here, ticker symbol VIX, you can see it's heating up right now. It closed above EMAs 4 and 8 down here. The key is going to be getting above this 300-day simple moving average in EMA 13. If it busts above 1317, that should be the signal that it wants to push higher. This was the first close above EMA 8 since back here on the second trading day in July. So it's trying to get a reversal going. It's all about breaking this blue line. Okay, so if you look at UVXY here, you can see it closed up 3% today. This has been really beaten down. It has been riding the pink line lower, which is EMA 4, and then you could see today a doji formed. There was the little gap up open above EMA 4 resistance. That's at 945. This was the first close above that level since back here once again on the second trading day of July. So this is trying to get a bounce going. The next key level to break is 976. If it drops back below 945, it's going to signal more consolidation. As you could see here yesterday, that doji formed, and there was a doji on Monday as well. Many times dojis form during pullbacks, signal a bounce is coming. So if it gets above 976, look for a run up to 10 and up to EMA 13. Take a look at TVIX. Okay, so TVIX here, it has a very similar pattern as well. It closed just above that EMA 4 level, the pink line at 37.31. As you can see, the last time it closed above that level was on the second trading day of July. So it's trying to get a reversal. You have these three dojis down here. If you got rid of this red candle here and you had the three dojis, that would have been the tri-star pattern. It didn't form the tri-star pattern, but you have the multiple dojis forming at the bottom of the chart, and many times that signals that it could be finding support and getting ready to bounce. You had the nice little start today. It's going to be all about getting above this 39 resistance level, EMA 8 here, and if it can get above 39, that should be the signal that it wants to keep pushing higher. If it drops below 37.30, that's going to signal more consolidation. Okay, take a look at Bitcoin. So this is the Bitcoin chart we've been looking at, working on for Bitstamp, and you can see here it had this big pullback forming bear flags on the way down, right? It had this repetitive pattern, and then it finally found support down here in June. It got the bottom down here at this, we're calling it the 5,800 support zone, and then since making that 5,800 support zone bottom, it has been trending higher. And so this has been a really nice move for Bitcoin. As you can see here, it got above the red line here. Also, if you drew a trend line going across here, it broke out of the channel. This is from going way back. This is a longer historical trend line right here. And so that break above that red line it is a big signal that it wants to head higher. It also closed above that 66 to 67 level that we were calling it, almost 6,800. This whole resistance zone here, the breakout above that level on the 17th did signal more upside potential. It had also broke above that 50-day simple moving average, that green line. Those were all signals that you know it was a green light pushing higher. Well, now it's hitting resistance. Check out the gold line there. That's the 100-day simple moving average at 76.25. It has to break that level to head higher. If it stalls out here, which it very well could do, notice how back over here in May, this was a big resistance zone. And so right now it worked its way right back up to the 7,500 resistance zone. Failed to break, and you're going to know if it's going to cool down by whether or not this pink line holds. That's EMA4 currently at 73.12. Okay, so a drop below 7,300 is going to be the signal that Bitcoin is cooling down and pulling back. Why do I say that? Look over here. When it got below the pink and green line here, especially on this big candle on the 10th of June, it really started heading lower. So as long as that pink line's holding, it's signaling more upside potential, but we're at a flex point right now. A flex point is where a move is imminent, where there's either resistance is going to break the 100-day simple moving average, or EMA4 support is going to break. It could consolidate sideways here for a few more days, but it's setting up here where one of these two levels is going to break. A breakout above the 100-day simple moving average signals more upside potential. A drop below EMA4 signals downside risk. Okay, so let's take a look at Microsoft here. This ended up doing really well in after-hours trading. You know, when they reported earnings, it did have a little bit of a dip, but it recovered quickly and took off nicely there. It's at 107.80 in after-hours trading. So congrats to everybody that loaded this. Good job. You know, that there was a lot of negative talk. You know, a lot of people were you know, trying to cast doubt on Microsoft heading into earnings here. But you know, it definitely has been a market leader, and today in after-hours trading, it's showing you that people are still super confident that this can head higher. It's at 107.80 now. It's at an all-time high. We're looking at a blue sky breakout for Microsoft. Okay, so now it's going to be really all about this 106 level. In my mind, that is the key level to stay above. If it stays above 106, it should keep pushing higher. If you see it consolidate and pull back below 106, that you know that's going to be a red flag. So right now, you want to see it stay above 106 and above 104.76. Expect a gap up open tomorrow. Check out this strong uptrend on the monthly chart. This is a multi-year monthly chart. This goes all the way back to 2009. And basically, if you loaded in 2009 and you just held the entire time, you're freaking loving it. You know, this is a good long-term hold. You know, we're traders, so we're always trying to, you know, scalp these moves in between. But as long as this EMA4 here at 99.35 is holding on the monthly chart, the signal is to keep riding. I mean, look at this chart here. The last close below EMA4 on the monthly chart was back here in April of 2016. You know, you know, maybe right here, yeah, in April as well, or yeah, May or June. You know, just it's been 2000. It's been a long time. So the bottom line is, strong chart, it's breaking out higher. Okay, let's look at SWKS. This is another big after-hours winner. Closed up at 105.57 in after-hours trading. You can see RSI is at 60, so it does still have more room to run there. It's been, you know, had been consolidating and basically this sideways channel. This is a chart that I posted in the chat today, or you know, this might have been the one from yesterday, and then yeah, I followed up today and posted it again. And so it's coming through here. And it's breaking out now at 105 above this 102, 103 resistance zone. It was all about breaking this high close here in June. You know, these two closes here, this is the high close. That was the really big level to break. And so if it can stay above that 103 level, that's going to signal that it wants to keep pushing higher. If it drops back to below 103, then it's going to be back in this channel, the sideways channel action. You know, this whole zone here between 95 and 102. You want to see it break breakout above that level. It did happen today in after hours trading. So as long as it can stay above that 103 level, it should keep pushing higher. As you can see here, this 105 level is going to be a big level to break. That was the high close from back in 2015. Okay, so notice how that when that high close got hit at 105, it turned into a big resistance level. Well, there was a break above it here in October of 2017, and that's all the way up there around 112, 113. So that's going to be the level if it can get above 105. You do have this just below 110 level. That's the high close in February for 2018, and this is the high close in October. So you're talking about 105, 110, basically 113. Three big levels to break to the upside. As long as that middle Bollinger Band at 98 is holding, this uptrend is intact and it should continue. Okay, so let's look at SKX here, Skechers. Big miss today. Okay, so it got crushed. All right, so they were really pushing this thing hard. Check out how strong they were pushing it. It closed yesterday above the bottom of the gap in the 300-day simple moving average, which is the blue line. There's a gap over here between high of day on this candle and low of day on this candle. And so that close above was signaling more upside potential. It was hitting this 100 and 200-day simple moving average resistance zone. Now that's all history now, because we're way, or whoever's in this is way down here at 24.95 now. The bottom dropped out on this chart. You know, it's below the 27.50 level. This was the level to hold from May. You know, if it runs back up to 27.50, that's going to be the big level to break. That was big support. Right now at 24.95, that's putting it down here for this 2017 September to October support zone. If it drops below 24, you know, basically you have this support from May of 2017, and that's lining up with this 300-week moving average at 23. You know, I think if you see, you know, the 25 resistance level fail to break and it drops below 24, I think it could really come down here, test this 300-week moving average, and that might be the key level that you get a chance to play the bounce. So look for a potential bounce off of the 23 support zone if it drops down to that level. Yeah, we're going to see if bottom feeders are going to be playing this bounce down here after the huge drop today. Keep in mind there is a 3-day rule that a lot of traders like to use, and I think it's a good rule. It seems like it's going to be working out for Netflix. When the stock has a big gap down open, you wait 3 days and then you look to play the bounce, and that way you protect yourself from the craziness. That said, tomorrow, you know, think about Netflix. If you didn't play the bounce on the first day, you missed a huge 50-point move off the lows. Now you had to sell that bounce because it kept driving lower, but it, you know, it wasn't the best location maybe for the unless you got the very low for the longer term investors. But you know, they might be able to get into the lower level. But the bottom line is that if you wait 3 days, the dust settles, then you can you know, then things get a little bit clearer, and a lot of times the bounce plays are a little safer. You know, but you know. You know, if you're a gunslinger, be looking to possibly play that bounce tomorrow after a huge drop just for a technical trade, because it's looking like a big gap down open. I mean, it's going to be, you know, it's going to be all about that 23 level. And so I think if they drop it down to 23, that's going to get really interesting. Okay, so let's look at TLRY here. This is the marijuana IPO. This is the first pure cannabis IPO for the big boards. This is trading on the NASDAQ now. And so this is, I thought this was the New York Stock Exchange, trading on the New York Stock Exchange. But yeah, I believe it is. And so yeah, this is you know, the first pure play where yeah, you know, there's a lot of excitement in the stock right now. It had this big move. You know, it closed below the open. The open was up here just above 23, and you can see the black candle formed. It did drop all the way down to 20, and there was a lot of buyers. It did hit 24 for the high. So this is the first trading day. This is an IPO. So the thing to do is to follow the intraday charts. And so right now, you want to see the share price stay above this middle Bollinger Band at 22.27. If that breaks, you could see it come back down here and test the 20s. Okay, test that 20 level. To the upside, you're looking for a break above intraday high close resistance. This is the highest close ever in the history of the stock on the 15-minute chart, and so it's going to be all about breaking this 2380 resistance zone. If it's trading above 2380, that should signal it wants to head higher. If you see it drop below 22, you could possibly see it come down here and test this 2050 support zone. Okay, take a look at KMI. Closed up 1% today. You know, it had that nice move right at the open, but it did not last long. That was so quick. It ran all the way up here into like 1844 or something was the high of day, and they pulled it back, and the bears attacked. The gains disappeared quickly on the call options it kills the premium when you have an intraday move like this where they run it up and then pull it back. It just crushes calls, and so even though the stock was up on the day, a lot of the call contracts were down. You know, especially if you're playing the expiration for tomorrow. So just keep that in mind. You can be right about the direction, but you can still lose on the trade if the implied volatility drops. You know, implied volatility was up here in the high 40s when it was hitting the high of day, and then, you know, it dropped down. I think it closed near 21. You know, that dropping implied volatility was your signal that the chart was breaking down. Right now, it's all about breaking this closing price here on the 10th of July. If it can get above this 1820 resistance zone, that should signal it wants to head higher. It came down here and it almost filled the gap. There's a small gap between high of day yesterday and low of day today. It's a micro gap. It's just a few pennies. As long as this middle Bollinger Band and 300-day simple moving average in the 1760 to 1770 support zone hold, this uptrend should continue. They had two buy ratings come out today, or reiterating their buy rating. Look at the big volume spike here. That pullback could be for they're pulling it back so people could load. Also has a lot to do with the options trading today. Bearish doji star reversal pattern did form today, so that is not the pattern that bulls are looking for. I mean, they had a good earnings report. They increased their dividend, up to 20 cents, and then they formed a bearish doji star reversal pattern. You know, that's the stock market for you. And so right here you can see all the magic happened in the first three candles of the day. This big spike right here was the climax spike. This red candle. It doesn't matter if it's a penny stock or if it's over-the-counter stock or a large cap or cryptocurrency or whatever. When they get above the upper Bollinger Band like this, you know that this does signal that the candles will likely work their way back in the bands. This just had a dramatic pullback back into the bands. It came down here. It held the middle Bollinger Band. It came back up and then it topped out again at 215. It made a lower high, and so now it's back below that middle Bollinger Band, and so it's going to be all about getting back above the middle Bollinger Band at 1805 and getting above this descending resistance line. If you can break above 1812, that would be really bullish. To the downside, if it drops below that 1797 level, 1798 level, then you could see the 200, 300, all these moving averages down here retested. It's all about holding the 1780 support zone. Okay, so take a look at GE. GE reports tomorrow. This is going to be, they report before the open. They had a big pullback leading up into this earnings. You could see they really walked it down. You know, it was kind of interesting to me that they had this big volume spike back here on the 26th and 27th. It looks like that could have been some loading, before earnings. It got above the middle Bollinger Band. It's been trying to hold this uptrend here. That was a big move, and it held support. Right now, it's all about breaking this 50 and 100-day simple moving averages. If they can get above that 1390 level, above the 50-day simple moving average, that would be super bullish and would signal more upside potential. And then it's all about breaking this high close here on the 10th of July. If they can get above this 1420 resistance zone, that would signal upside potential that it wants to keep pushing higher. You could possibly see a run back up into the 15s. If it drops down below that 1364 level, that would signal downside risk. That's the middle Bollinger Band. If it were to drop below that on the gap down tomorrow, then it could start a whole new downtrend. So it closed right on, the 50-yard line here, the middle Bollinger Band. This is the upper Bollinger Band is the top, the lower Bollinger Band is the bottom, and this is the middle Bollinger Band. It closed right on the 50-yard line, so it could go either way right here. It's above 1390 signals upside potential, below 1360 signals downside risk. This bullish Haremy cross reversal pattern did form yesterday, and then today a doji formed. formed as well, and so you've got this double doji thing going on. To me, that wasn't quite a doji here, but that's what the computer was saying, that this was a bullish Harambe cross. But basically, you've got this doji bounce candle that formed today. You can see the close was the same price as the open, and many times when you have a pullback like this and a doji formed, that signals a possible bounce. So yeah, so we'll keep an eye on GE tomorrow and see how earnings go. All right, thanks for viewing this chart or viewing this video, everybody. I hope the information helps. Please come check out the chat. Okay, thank you.